All right, welcome everybody. Doug here with the LincolnList.com. Today's lesson, we're going to talk about the power of towers. I'm going to tell you what it is, how you can use this to make some money with your trading. Now, some of you might know it by its technical name, which I believe is the Marabuzzo brothers. I believe it is because I have no idea if I'm pronouncing that right, which is no surprise. I don't pronounce a lot of things correctly. But you also may have referred to them as tweezers as well, or heard them referred to tweezers as in the past. I, however, like to call them the power of towers because it just sounds a lot sexier, and it really is a great strategy that you can use both to the long side and both to the short side. But what you need to learn most about the strategy is it really is a great way to kind of pinpoint where a trend might change, whether it's for a short period of time or a much longer period of time. So what we're going to do is we'll start out showing you some day trading examples and how you can use this regardless of what direction you may want to make a trade in. And then we'll take a look at how a swing trader might use this as well. We'll go with CZR today, as this was a pretty good example of it. And I find this works best when a stock, the longer it spins going in one direction. So for example, this CZR, it's obvious very bullish right now. The longer it goes in one direction, the more pronounced that move might be when it comes in. So what you have here is you see CZR starts out the day. It's going very strong. It's continuing to go up for about the first hour and a half into the trading session. And then finally, when it has this big explosion breakout right here after the first hour and a half, it's immediately followed up by this red bar. Now you can see how these two things are just, they kind of match, except for one's green, one's red, but you see what I'm talking about. You got a nice little tower formation. Now what you should know about this is, what does this really mean in real time when you're taking a trade? What this kind of shows you, or hints towards you, is this is where traders across the board have determined that this stock has moved too fast, it's up too high, and this is where profit taking or selling is going to take place, at least for right now. Now maybe later in the day that's going to change, but at least for this period of time, the market has determined this is too high. Because if you look at this chart, it's had a lot of green bars. It had this really big move right here early as well, but it wasn't sold off. That really means these traders back here who had went long, or people that are long here, are not being shaken out by this move. It's just a small sell. You see those small bars, and then the stock kind of re-gears and explodes. However, when it makes this second explosion to the upside, it's immediately followed by this red bar, and this red bar consumes the entire move in that same time frame. So what that tells you as a trader is this is just not a reversal, this is a smack. So this thing goes up and it's slammed, and this now becomes your overhead resistance. Now in this trade, what it did is it showed you here that you've got a nice little pullback on this. Now sometimes these pullbacks might be small. In this case, I believe it was here for CZR, which we'll get to in a second. Other times they'll be a lot larger, which I'll show you. Now CZR did eventually move its way back up to the highs. But let's take a look at what this would mean. First of all, if you were long biased and you were waiting all day to purchase CZR, then buying into this red candle, being the power of tower, would be a bad idea, at least for the short term, because you're buying into 16.16, and then a couple of minutes later the stock is down there in the mid 15s. Now the reason I say that is because a lot of people, they trade with emotion. So you take this trade, and you know what I'm saying, this is how it works. You take a trade and you push the button, and it immediately goes red on you, and it goes down, it goes down, it goes down, it goes down. You start to question your decisions. It's this whole psychological snowball effect, and then you get mad and you close the trade, and then an hour later it breaks out again. And that happens a lot. And the reason we use these technical analysis patterns is it helps us pinpoint risk, but it also helps us pinpoint areas for psychological reasons, so we get the best price, so we're least likely to be shaken out or stopped. So you can see how powerful this tower move was. It showed you, a good little reversal in that stock. So if you were wanting to buy it and you saw that, the best decision, wait, let it build a base, and then come back and visit it. Now, if you've been stocking this thing short, or you happen to short on this green, then this red bar would give you the confidence that resistance is nearby overhead. You now have a pivot point, or this is a great place to execute a short with a stop at high a day. Now, I mentioned earlier about swing traders. If you look into this chart, we kind of go back a little while. After this long downtrend in September, right here, several down days and a huge red day, you can see that this wipeout candle right here, this little tower at the bottom, this is actually a little bit bigger than the red, but this little pivot right here, where this green bar took out one of those previous reds, started another uptrend. So it just, the example will work with just about any stock. What will determine the kind of trader, swing trader, day trader, will be actually what kind of chart you're looking at. But you can see how powerful something like that can be. To give you maybe another example was this RGLS today. Sometimes they'll work a little different. You got this really strong move to the upside. People start chasing these moves, and that's how this whole system works. You start to see that chase. You start to see these greens. They get bigger, and on this one right here, when it hits that whole number of 19, it immediately gets smacked. You can see the size, and that's what's important to remember about it. It's the size of the bar. It's equal to or larger than the previous green, or if you're going the other way, which I'll show you what it looks like to the downside. It shows you such an abrupt change in the trend. And just like CZR, you can have the opportunity to execute your short, or if you're long biased on this, it's not the right time to buy. But this one here was a little bit different. You saw it kind of rolled over, and sometimes that's the thing when you get short on them. Sometimes they'll fade all day. Sometimes they'll only fade for 25 to 30 minutes. The important thing, though, is executing at the right price and getting a quality fill on a trade like this. So you can see this one actually marked the beginning of the longer term downtrend. This one never really recovered. And the thing is a lot of people chasing that move, and that's the purpose of this video, is to give you the clues. If you long this and you see that big shakeout bar coming, that it's time to get out. And that's one of the reasons why it works. Not only is it an abrupt change in the trend, but what's truly happening underneath is that all the people that had bought and chased this particular move now realize they just got hooked, and they're going to get flushed out on a really strong red. And that often begins a really nice down cycle or a brief shift in the trend. Now, if you want to take a look at what that looks like to the other side, here's this little ABY. And they don't necessarily have to be back to back. Sometimes you'll see them like this, where there's a little doji or a small little bar in between. But when that candlestick is close to the size of the previous one, that's what we're talking about. It usually will signify a nice change in the trend. And as I mentioned earlier, it usually will happen after the biggest move. So this thing is fading. If you really take a look at this chart here, it's fading a good 40 minutes, but it's slow. It's really slow. You can see it's kind of slow, and all of a sudden it just has this huge red. It just flushes everybody out and just takes out a bunch of stops, and it's a big flush. Then it takes a little bit of a breather for a couple minutes, and then it's right back at it with this solid green. That shows you the other side. If we were to turn this upside down, it would look a lot like RGLS, a lot like CZR, signifying a potential bottom in that trend. You can see this one here started that move at 26.98, and this thing didn't stop till 30.02. So you can see you can make some pretty good money on these trades. But the important thing is that it showed you a nice clear area, a change in trend. So if we kind of recap, the first thing if you're going to do, if you're a counter trend trader, which I like to do a lot myself, the Power of Towers will give you the opportunity to identify a really good trend, possible trend change, a high probability trend change, along with a tight risk. For example, if our intent was to long ABY, as soon as this thing were to perk, we could get long somewhere around in here, placing our stop at low a day. We've defined our risk, and then we'll let the trade go to work and bounce. If we were short, we would do the same thing. For example, RGLS, you would short into that red, stop over the highs, and then let that trade go to work. That's one way if you want to do the counter trend. If you're wanting to go with the trend, for example, like a CZR, your intent was to buy the stock, then you can use the Power of Towers to delay that buying. So it would be very easy for any trader to see something like this and become mesmerized and say, oh man, this thing's going up. It's going right through the roof. What the hell am I can't, you know what I'm talking about. You look and you stare and you stare and it keeps going up and you turn your back, you come back and it's up more and you turn your back again, you come back and it's up more and you finally get sick and tired of it. All right, damn it, I'm buying the thing. And you do that and then the next bar it gets wasted. So if you're long biased, it will let you know, hey, look, this thing's probably going to pull back a little bit. Let's look for some areas to get long after the pullback. You got some support down in here, kind of flattens out. And now you get a price of 1550 to 1560 versus 1637. That's a lot. That's a big price change because at the end of the day, you could have sold for peanuts or a pretty significant profit. So you can just see on one trade how powerful this move is. And that's why I call it the power of towers, because it really is powerful. So now you can see how you can use it in a couple of different ways, regardless of what your bias is. To learn more about technical analysis trading and to see more, because there's other things highlighting these charts that will help you profit on a daily basis, visit the lincolnlist.com. Feel free to take a 14-day free trial to our live trade room. And I mean live. Every day we trade real time on screen, just like you're seeing now. All the trades are voiced out with the stops, the targets, the setups. Imagine how that can take your trading to the next level. So if you need some help, thelincolnlist.com. As always, thanks for watching this lesson. And the most important thing, I hope it puts some money in your pocket.